Hey, welcome everyone. It is Thursday. It is 6:30 p.m. Eastern, and it is the second to the last day of trading this week. It is Thursday night. We have some football on tonight. I think the Buccaneers are going to play the Falcons, which should be a good game, and we'll see who comes out the winner. We also have a live streamer in Trader Prad starting in about an hour and a half. And I'm going to be watching Trader Prad and watching football, a little multitasking, along with checking out my stocks as well. It's been a couple of days that have just been a little bit boring, a little bit slow. It's been a red day today, a red day yesterday. Nothing like horrific or anything, but these are like the dog days of September, October. Now, this past September was good, but this particular October is a little bit weird. But there's a couple of sectors that did work today. I'm going to show those next. I just wanted to kind of fly over the market overall. And let me say good evening to Shadow Guy. I think it's pretty late where you're at. I appreciate you joining. And defensive sector rally today. Yeah, a little bit of that. I think energy really rallied with the energy complex really reacting to higher oil prices because the conflict in the Middle East. So we'll take a look at oil stocks today. It's been a topic of discussion on the live streams for about a month. And I'm really glad we were talking about them 3-4 weeks ago because the buying was great 3 weeks ago. Stocks were quite a bit lower. And I would say that there's some good upside in energy, and I'm going to show a couple of things that I think you're going to find interesting. How you doing, Mike? Let's see here. Let me catch up on some comments. First, Shadow Guy. You don't like the commercials through the NFL. I get it. They got to make money. They got to pay billions for the viewing rights in order to make up for it. All right, so Dividend the Investor Guy, we need a good rally day so I can sell a few things. All I've been doing is buying. Yeah, let's see how it goes. I think October tends to be kind of a tough month, especially this year because we have the election coming. Now, we have caught a couple bits of good news, and I'm going to get into economic news in a bit. But it could be a lot worse than where we're at. I thought last month we were going to sell off, but we didn't. So I'll take it. I'll take the gain. So real quick. So the Dow was down, S&P was down, NASDAQ was down, but not too much. And the Russell was down the most, which represents the smaller caps. All righty. And just some big news. Economically, tomorrow we get an employment report, and we look at that thing weekly. I'm not expecting it to be bad because the previous one was released 2 weeks ago, along with the Federal Reserve talking 2 weeks ago, and it was okay. So I'm expecting that the unemployment rate's not going to change. It's going to be about around 4.2, and if it comes in at 4.2, and it's going to be kind of a nothing burger. It's going to be just, hey, we got a report. Great, the economy's okay. Now, of course, if it were to jump up and it surprises everyone, it could cause a sell-off. Don't think it's going to report a very encouraging number because I think the unemployment rate's pretty good at 4.2. I think you can get in the threes, but when we get in the threes, it's usually when we have an economy that's pretty vibrant, really, really moving and working. And I don't think that's the economy we are in. Okay. Anything else tomorrow going on? Just payroll data and some other things. So tomorrow, other than that report, there shouldn't be too much news. Now, the stock market in China continues to be closed in the Shanghai exchange because they have this big holiday that they're observing, but they are the stocks that are traded on the New York Stock Exchange have been trading, and they have been trading quite interestingly. They've been up for the most part, but today they really sold off and then came back to some extent. So I bought some more Chinese stocks today. And Shadow Guy, I'm originally from San Jose. So you're a hockey fan. Cool. I guess you're a Sharks fan if you are from San Jose. Interesting. Cool. So, all righty. So looking at the sectors, energy sector, it did the best. It was up 1.44. I'm going to look at some individual stocks and see how that sorted itself out, because I didn't see the big energy companies do all that great. So I'm trying to find out which energy companies really rallied. Technology did well. I know NVIDIA did well today, as well as some others like Palantir did well today, among others. So we'll take a look at that. The industries that really lagged: materials lagged, consumer discretionary, healthcare, consumer staples. What usually is defensive wasn't very defensive today. And okay. You know, what's interesting, it's kind of a paradox, is if everybody's employed, that means most people have healthcare. So healthcare companies should be doing well. It's kind of one thing that's kind of surprised me. I thought healthcare would be doing better, but here we are. Market will teach us something new every day. Okay, so that's where the sectors are at. The action was all in energy. And when we look at the energy complex, right, here's the total market cap. It's 3.6 trillion. It's, if you can believe it, Apple's almost that valuation. That's how valuable Apple is. Isn't that incredible? Exxon is the biggest of the pack at 544 billion, and then Chevron's number 2, Shell, and there's companies all the way down. So I wanted to look at a couple. I'm going to look at Oxy. I already opened up a browser for that. Kinder Morgan, I believe, does energy transfers. Well, here's energy transfer. That's always interesting to look at. We'll look at that one. Marathon, that's the one that was really cranking today. So I'm going to look at the bigs first and show you that, Exxon did okay today, up 0.487. And for the year, it's just up 6%. If you add the dividend, you're really not doing all that great. And if you're with Chevron, you're doing even worse. And that's where I'm at. I'm down 9%. I get a dividend, but I'm still down 5%. So what gives? The oil prices are up. So over the last month, stocks are picking up, but I'm not seeing them really rally. I mean, oil prices are picking up quickly. We went from low 60s to low 70s in a matter of like 2 weeks. So where is the rally? There should be a rally. It looks like Brad's on. You're looking at pump. I've got a browser that I'm going to look at pump in a bit. So I'm glad you brought it up. I'm going to look at pump in a bit. And Mike, the dividend investor guy. Is it Devon Energy? DBN. Let's take a look at DBN too. So Chevron didn't do all that great. I don't have Devon Energy, so let's open that guy up. It went up. See, this is the kind of rally I was expecting. If you have oil prices moving up so quickly over the last month, this one is still down for the month because oil prices were down quite a bit. So you could have picked this guy up at 37 a share, and now it's up to 41. All right. So that's what that's doing. I think I have pump. This is pump here. Pump does oil field services. They are doing okay. They're doing okay. They went up 3.51%. They're on a good rally. And I think it's going to be sustainable because the conflict between Iran and Israel is not getting sorted out. It doesn't seem quickly. And according to what the U.S. government is saying, that Israel is getting ready for a retaliation to the last, I guess, missile attack from Iran. Well, that's just going to prolong this thing. How many times are they going to go back and forth? We'll see. And I think it's going to add that tension that's going to increase oil prices, and we'll see how long this thing's going to last. For now, I think that these oil stocks are going to keep rallying because as we get closer to, if you have a higher oil price, which in the case here, oil is priced at $74 a barrel. That's a good barrel price for an oil company. And if we have any more tension that drives this oil price higher, let's say hit 80, the oil companies become really profitable. Let's take a look at their cash flow first, and we'll start with Marathon was up a lot. I wanted to look at that one, but I'm going to close Halliburton, and I wanted to start with an oil company. Let's start with Occidental. Occidental is a pure play exploration company. They're an upstream oil company. They were up 2.53% today. They're a $51 billion market cap company where Exxon was about 10 times bigger. Chevron's just south of 300 billion. So these guys are a little smaller. Warren Buffett likes Oxy. He likes investing in this company. This stock is still not performing for the prior month, and it's down 12% for the year. Now, if oil prices keep rallying, this one may be a pretty attractive little stock here. So quarterly, I mean, it looks red, but there's some green here. That's good. Okay. It's these oil prices that cause, revenue to go down, because when Oxy sells their oil in the market, they get a lower price. Now, the PE is expected this year to be 13.5 and then 15 next year. That's a pretty decent PE. Analysts think it's discounted by 22%. And when we looked at their revenue, it's kind of up and down based on oil prices. When we look at their balance sheet, they have 1.8 billion in cash, and they have total debt at 20 billion. So they have about 19 billion of net debt. So let me hear from Mike, Brad, and Shadow Guy. Pick one oil company, and I'll go, from start to finish on a valuation. I already have Chevron, so don't pick Chevron because I've already got that one done. But I wanted to create one on the fly. If you guys want to pick one, or I'll pick one that you guys kind of talked about here. Either I think we saw Devon come up and Pump. I already have Pump done, so maybe we can look at Devon, and I can analyze that from soup to nuts if you guys wouldn't mind, unless you guys want to recommend a different one. But this one here, from a cash flow perspective, when we look at Oxy, ET, Energy Transfer, that's a good one. Okay. So Oxy, free cash flow wise, you could see they're a cash flow producer. They really went up nicely. Here, they were just making money. Look at that, 12 billion. And they've settled down at 4. Now, it's probably going to be a little higher, since these higher oil prices just mean higher cash. So this company's worth, 40 to 60 billion dollars. And Warren Buffett's just sitting there, he has 2 oil companies. If that means anything, Warren Buffett is okay with oil companies. So Oxy looks pretty interesting, but let's take a look at ET. Did you ever check out Eco Petrol in Colombia? I've never seen Eco Petrol. Eco Petrol. I never knew Colombia had a lot of oil. You know who has a lot of oil is Venezuela. They have a lot of oil. And they actually export a lot of their oil. For some reason, they started giving their citizens free gasoline, and citizens really liked that, but citizens would take the gasoline and cross the border and sell it. And they got to get people from doing that. They stop people from doing that. All right, we're going to look at Energy Transfer, and we will take that one from start to finish. Let me close some of these browsers so I have an easier space to work with. So I'm going to leave this guy open, and look at that. ET is right there. I'm going to leave Marathon open. I thought that looked interesting. Close that guy. Close that guy. And I'll leave that guy open. So Energy Transfer provides energy-related services. This company owns and operates natural gas transportation pipeline and natural gas storage facilities in Texas and Oklahoma. Approximately 20,090 miles of interstate natural gas pipeline. Okay. So, all right. They're a $55 billion company. This is a limited partnership. So that's another one of these. Let's take a look at the 5-year. So it's gone up 28%, and it pays a good dividend of 7%. So if you look at that dividend rate, and if you were to think about, okay, you were paid a really good dividend for 5 years, that adds up to something. And then it's about a 28% appreciation. So that's a pretty good return. It's not great, but it's good. And look at this upward chart. Very clean. And the other charts we were looking at with like Exxon, Chevron, they were up and down. So this energy company is kind of a very consistent player. When we look at their revenue, the revenue is 83 billion and 55 billion because they own the pipeline. They're not like looking for oil or natural gas and trying to explore for it. They're just operating the transmission pipeline to get that energy to market. So their revenue has gone up over time. Very good. They probably acquired more pipeline or built it, created it. In the quarterly, it looks like the quarterly looks really good. Nice growth. Okay. So trailing 12 months are 82.4 billion in revenue. They've been growing recently. That looked really good. Very good. Balance sheet, $650 million in cash. How much debt? Total debt, 58.4 billion. So let's say that they have 58 billion in debt. And they have 14 billion in EBITDA. So they are 28, 42. So they're a little above 3. They're like at 3.7. So it is kind of a yellow flag. Like, okay, they're above the desired, debt to EBITDA ratio. Let me see if their debt's been growing or coming down. So total debt. Yeah, it's been growing a little bit. You see that it was 40, 49, 53, and then 58. I don't think it's total showstopper. It's just a yellow flag. Hey, the balance sheet is not as good as like a Chevron. I could tell you for a fact that they're less than 3 times EBITDA. Exxon is 2. But their stock isn't performing all that great. So, okay, I'm gonna just raise a yellow flag. It's not a red flag just yet. Let's look at cash flow, see how these guys have been cash flowing. And then I can do a back of the napkin valuation and see if we want to jump into a model and value. So the cash flow looks really good. Nice, consistent cash flow generator, 6.7 being their trailing 12 months. That looks really good. So 6.7 for a company that's growing in the energy complex. I would want to multiply that times 15, which gets me to like 90 billion. And well, gets me to 90 to 100 billion. But when I decrement the debt, I get back to 50. But let's go ahead and do this one. I think there's enough meat on the bone to kind of take a look at it. So I'll take a look at energy transfer. What I'm going to do is I'm going to move this browser to a screen you guys can't see so I can use 2 screens and update this valuation very quickly for you. So we're going to use Chevron because that's in the same industry, kind of a different company, but it's a similar industry. So for all you members out there, I gave you access to a folder. You will get this model in that folder and you can work with it. We're going to have a member conference call on Sunday. If you can make it, wonderful. And we could talk about it if you need any tips on how to use it. And if you would like to schedule like a workshop where we just work on doing valuations, and maybe we do it on a video conference call so you could actually show your screen and show what you're doing. I'm game on that. So members, if you guys want to do that, let me know. All right. So I'm going to copy this guy and then create a new valuation for energy transfer. All right. So it's energy transfer. All right. So we said cash flow was and I'm going to look that up on the other screen. Cash flow was, I think it was 6.7 billion. Yeah, 6.7 billion in the trailing 12 months. So this is going to be trailing 12 months, 6.7 billion. And the way I have it is you would put 6,700 because this is in millions. So now the question is, these guys are growing nicely. So I think they're going to grow that cash flow. And I think they're going to grow nicely for the next couple of years. So I'm going to go with 10% as a growth rate and then 4% into the future, which will affect terminal value. So 6.7, they are in a riskier industry. They can have one of their pipelines, leak. And then next thing you know, they have a lot of problems. Okay. And you know what? I'm going to tone this down a little bit. I think that growth's too high. All right. So we have that there. They had a very little cash. They had 650 million. And then they had a lot of debt, which was 50 some odd billion, 432, 58 billion. So the valuation is nice at 80 billion. The market cap on Energy Transfer is 55. $55.820 billion. And the shares outstanding are 3.420 billion shares. So the value per share is $23. The current share price is $16.31. So there's a 44% discount. If you look at the free cash flows of Energy Transfer, and I like looking at the forecast of earnings per share and valuing the company based on that. And I'm going to use 2025's numbers because we're rounding, third heading for 2025. So that number is $1.60 per share. PE on an energy company. Energy companies don't get big PE, so I'm going to leave it at 16. That's what I had with Chevron, and 4%. That looks okay. I'm going to tone it down a bit. So overall, this thing values, right? So it's showing very good value based on those free cash flows, and this is a good brand for what they do. A lot of investors like Energy Transfer. You see them in a lot of income ETFs. So this one here, we just took the cash flows, created a forecast. This forecast takes the trailing 12 months, and we grow it by 8% in years 2, 3, 4. That's what this sheet model will do. Terminal value, this is the formula here, and you can Google what terminal value formula you should use, and it would pretty much match what I'm using here. And that's taking this growth rate into account. This number is very important. The discount rate means what's the weighted average cost of capital for the company, and what is the discount you want to use. Now, it's my money, it's my risk, so I'm going with a 9. If you could see a bigger company like Chevron, I think they have a really good balance sheet. I know they're going to be around. I use an 8. But Energy Transfer is smaller, so I'm going to use a 9. And that's how I get, this is the number that I really depend on the most. I take 2/3 of the valuation from this number, and then I use this as 1/3 of the value, and I blend the two to get to this number of 50% discount. So Energy Transfer looks good. A lot of these energy companies look good, and what we're waiting for is the market to think they're good. It's interesting how the market, something can look really good, but the market doesn't care. It's just not gonna buy it, and that's interesting. So, all right, let me catch up to some comments here. And so Devon Energy, we talked about it a little bit. We can go over Pump. I have Pump in here. Pump is right here. Pump looks really good. It's a small company, but the valuation, right? The market cap's really low, and the stock price is really reasonable. So it really just shows a good discount. I was in Pump, then I got out of Pump. I just wanted to be in a little more cash. I'm glad so I could buy, the China trade. But I think Pump's going to start to work. I think if you have a higher oil price, the energy companies are going to say, hey, Pump, we want you to do more work for us. Come out and help us with our fracking. So I think these are good options. And these are 3 very different companies. This is a big vertically integrated oil company. They owned or have the rights to drill into Pacific lands, extract the oil, refine it, and then put it to market downstream. This company is like, hey, I don't extract the oil, I don't extract the natural gas. I just have a pipeline to move it from where it's being extracted and then to its source market. So, and they control that pipeline. It's very consistent, as you saw in their financials. And then Pump is a services company within the oil complex. So 3 different companies in the same industry. So it's interesting to take a look at those. So that was Energy Transfer. I'm going to add that to my watch list over here. And I'll just write myself a note so I can come back and fill in the other fields at another time. So, all right, so that's Energy Transfer. And let's take a look at C here. So Shadow Guy, you've been to the Shark Tank, huh? Yeah, I've been there too. Pretty cool. Up in San Jose. I love San Jose. It's a cool town. Hey, so I'm glad you brought up HIMS. I want to look at HIMS. You're glad you sold HIMS. Yeah. So today I want to look at it. I have it on my list. You guys can't see my notepad here, but I want to look at it. Give me a few minutes. So CVX. So I have CVX too, but I have Oxy, Halliburton, Schlumberger, Equinor, and then PBR is the Brazilian company, right? Wow, man. You're holding some good oil companies there. I hope you're making lots of money, Mike. I hope it's really coming together. I hope oil, well, for your sake, I hope oil hits $100 and then you'll be like, yes, made a lot of money. Everybody else will be mad that the gasoline prices are higher. So Brad, you ran the model on Energy Transfer. Cool. Very good. I'm glad that you're getting a similar result. And you know, when you go to these models, the one thing I would like, I created my own because I understood what other investors were doing. I understood their process, but I wanted to make it mine. I'm a believer, and I'm sure you guys identify, right, with like, I didn't understand accounting or finance or even calculus or any of the tough arithmetics until I understood the numbers and I understood kind of like what you were putting in and what you were getting out, every number. So that's why I created my own model. And I encourage you to really study the formulas and really understand, what does it mean? What does this cash forecast means? It means we're forecasting that we expect these kinds of cash flows. And that's your decision. It's not nobody else's decision. I don't like picking numbers from websites that say, oh, Energy Transfer is discounted by 100% or it's not discounted. Hey, I want to calculate it myself. I want to make sure that I know the inputs and then I can interpret the outputs and then make a good decision on an investment. And that's why I created my own little model. I encourage you to take my model, copy it, make it yours, and be able to go through the model, backwards and front, really understand each number. And watch other YouTubers. I know Scott's due diligence is excellent. He's got really good ways of going through it. I go differently. I pick my own lane, but it's very similar to his, and I appreciate what he does. There's a couple of the YouTubers that really do the deep analysis that I appreciate. So you're long on Energy Transfer. Yeah, I understand why. So energy, let's see what it does. This is, Energy Transfer is up tomorrow. Let's see who did the best in the space. Wow, Indonesia Energy, 22. U.S. Energy Corp. They're tiny companies. Look at these companies. Houston American. So these are they're sitting on the rights to drill in a particular spot, and they really are taking off. Interesting. Let's see this one here. I'm curious to see what this company looks like. So over the 1 year, wow, it's up 12%. In the last month is when all the action's happening, 58%. It's a tiny company. And I don't even know if they do have revenue. Okay. They have revenue. It's down because of oil prices. But this is like feast or famine. U.S. Energy Corp. What's their story? So U.S. Energy Corp is an independent energy company focused on acquisition, exploration, and development of oil and natural gas properties. Yep. Okay. The oil business is a lot like mining. It's a lot like, gold mining. They have to find the oil, and then they have to figure out how to best extract it. It does cost a lot of money, and they could lose a lot of money. So these are small oil companies. This is not my game. I'm not that good. I'll just know my limitations and not go after these guys. All right. So let's take a look at, I think somebody brought up, and I wanted to look at HIMS, because HIMS had a big drop. So 9.6%. They really came down. What happened? So 4 hours ago. So Hims and Hers health stock falls as FDA drops Eli Lilly weight loss drugs from shortage list. So what does that mean? So the FDA allows companies to produce copycat drugs when a drug is deemed to be in short supply. So they were allowing Hims to basically copy temporarily. And the change is going to hit Hims because they didn't do the drug discovery that Eli Lilly did. So now that Eli Lilly has plenty of production, they're going to not allow Hims to sell their product any longer. Oh, interesting. So Hims was kind of using the FDA rules to their advantage. Okay. Now, Hims has been a good grower. I mean, look at this growth. But it's expected, the weight loss drugs are really popular. So maybe that's going to slow them down a bit. They're not an overly big company right now. They're just $1 billion company. Now, $1 billion revenue company. What's their market cap? 3.71 billion in market cap. Okay, that's not too bad. 3 times revenue, almost 3.5 times. And PE is really high. Whoa, 58 on 2025's number. Analysts think it's discounted. Now, when I look at it, it is interesting. We got balance sheet, $227 million of cash and short-term investments, and then total debt, really no debt. Very good. Very good. And then for cash flow, so free cash flow, they're up to $100 in free cash flow. So they're a young company, and now they've hit cash flow. So that looks good. So I would say that this company, I mean, you could value it at like $3 billion, but after that, it's just kind of risky because things like this happen. They're a young company. Looks like they're going to be disallowed from copycatting the weight loss drug. So I'm not ready to kind of buy this stock. It'd be nicer to buy a company that owns the patents and has the right to distribute that drug. And that's what they don't have. That's one of the liabilities that these guys have. I have other options. I think they are these guys are considered a consumer staple, personal products. They're not even considered a healthcare pharmaceutical company. So they're more of a distribution company. So they have good growth. But let me look at one more last thing is margins, right? Margins are great. Wow. Look at this margin. So their revenues $1.067 billion, and the gross profit is $877 million. That's like 80%. That's excellent. That's very good. Selling, general, and admin, there's probably a lot of cost in operating the business. Looks that way. Research and development, not too bad. But I'm impressed with that gross margin number. So that's what HIMS is all about. They had a pretty good drop today. So I like your idea of having a set. Yeah. Let's kind of kick that around. And if you guys want to have a working session, I think that'd be interesting to kind of have a working session and kind of work on a stock, kind of try to value it and make it a good working session. You got to run, Mike. All right. Have a good night. Thanks for attending. I appreciate it. Trader Prad. So didn't HIMS make their own erectile? Yeah, they did. No, I think they came up with their own formula, or they copied a formula, or they licensed the formula and then they sell it. So here, like the news, I think you may have heard it, may not have heard it, is the big drop is because the Eli Lilly drug was put on a very scarce list, and the FDA allows other companies to copycat it so the public can have access to it. And it's no longer on that list, so they can't, kind of produce that drug for free and sell it to the public and make lots of money. So that is off their catalog and they can't sell it. And that's one of the most popular drugs out there right now. All right. So we covered HIMS, kind of took a look at that. So is HIMS compounding or selling well, it depends on the particular product, right? In the case of the weight loss drug, they were copying Eli Lilly's formula, but now the FDA is saying you can't do that because they have plenty of supply. But I think they've taken in other drugs, they probably license the ability to copy a formulation that somebody else created, and then they create it and sell it. Weight loss drugs are all the hype. They are. And Novartis with Ozempic and Eli Lilly, I don't know what their drug is called, but they are doing really well. So good for them. Really smart that they did that. And very good franchise. Eli Lilly is way up there in value. I think they're approaching. So they're approaching a trillion. They're 800 billion in value. And this one here, man, God dang it. How did I miss this one? This is British. They're headquartered in Britain, if I'm not mistaken. They just got on a run where they had all the right drugs. They have the obesity drugs. They have other drugs that are doing well. These guys are loaded with very good pipeline of drugs, and you get to keep the patent for a number of years so they can keep their competitors out of the marketplace. Now, at $800 billion in valuation, that's an expensive company. So I've never had the nerve to jump in, but congratulations to everybody that did, because they keep growing. Look at this growth rate. They're already pretty big, but you are paying a lot for sales. You're paying 20 times sales. The PE is 109. Forward PE 42. Strong buy, but only discounted by 6%. So Eli Lilly just never made it into my desired list, but total respect for the company, and whoever saw it, understood it. Congratulations. You should feel good about that investment. So see here, free cash flow isn't all that great in 24 and in 23. In prior years, it looked very good. But even when you look at free cash flow and you look at an 800 billion valuation, man, that is a lot of money. You got, let's just take 6 billion, right? Took 800 divided by the opposite, take 6 billion divided by 800. You're looking at less than 1% in free cash flow as a yield. You're looking at 0.8%. That's terrible. It's a really expensive stock. But people are valuing it based on its growth. and they think the stock is really worth it because they keep growing. People understand it's a weight loss. Once the market gets rolling on a particular theme, holy smokes, look out, step back, or you'll get run over. And you have their revenues projected to not quite double in a couple of years, but it's going to get much larger. But even if they went from 46.7 billion to 70, let's say they doubled that free cash flow rate or even tripled it up to 18 billion, I would still have a hard time valuing the company. I'd be like, it's still not worth 800 billion. If you look at companies that are trillion-dollar companies, I'm trying to think. I think Microsoft is comparable. Let me look at Microsoft. These guys are massive companies, massive valuations, but they have the cash flow to excite you. And look at this upward trend. That's why Microsoft is so valuable. And they have good products. They're strategically, the future looks good for them. And we look at Eli Lilly, they're at 6 billion. It's like, wow, that's really low, super low. So I don't quite get the valuation of 800 billion, but all those that understood it and picked the right models and made the right decisions, congratulations. So you're hearing that the port strike has been suspended until January? That is breaking news. What is going on? All right, so wow. Okay, this may cause a little bit of a rally tomorrow. Okay, that's good news. I hope both sides walked away okay. Man, all right. You broke the story, Brad. Thank you. That's encouraging. I was concerned that, you have a prolonged strike, it's just going to get ugly. And it is going to affect especially like retail and some distribution companies. In some ways, like logistics companies, some of them would have benefited because, I got to expedite this inventory from the West Coast to the East Coast, and I got to pay this, logistics company to do that for me. They're going to benefit. But in some ways, the volumes may have been lower, and that would have been hurtful to the logistics industry. But it looks like it got sorted out. That's good. All right, so let me go over a few other things, and we'll keep it short and sweet tonight and move on. So the one company I wanted to look at was NVDA. The CEO talked about Blackwell, and he said a lot of encouraging things about Blackwell, that the demand is insane. And that might be the case, but I think when you have a new product launch, it could be that it cannibalizes the current products. So if you cannibalize the current products, you may see a dip in revenue, and he may be getting the excitement going. So investors might, look the other way for a quarter or two. We'll see how it plays out. But that was the announcement that was out there, that Blackwell, the demand's really high. So investors really reacted to it. And this stock is expensive. It's a $3 trillion stock. This is a cyclical industry, but we'll see. The bulls on NVIDIA have been correct, but it still hasn't eclipsed its all-time high, which happened on June 18th. And we'll see if it does it this time around, or if it continues to meander down. We'll see where it goes. The stock that is just on fire is Vistra. I cannot believe a utility can do this, but it did, 307%. And this is a stock that I shorted, and it's kind of running me over right now. I didn't put a lot of money into it, so it's not like I'm, going to be liquidating my portfolio, but I just got it wrong. These guys just took off, and I'm beginning to unwind that short position. And the stock market's charging me a pretty expensive tuition fee on this stock. I happen to believe utilities are not worth much. If you look at their data for the last 30 years, they're not worth much. But investors believe that company is worth what they're worth. It doesn't matter that they don't produce free cash flows. It doesn't matter that they have to put so much capital back into their business every year, because the utility business just happens to be where you have to put back capital back into the business year after year, which is why when you look at utility stocks and you look at the 5-year on utilities, it's very bad, 30%. And that's with this year being so great. But you look at the 5-year, it's among the lowest. The only one that's lower is real estate. And if it didn't have this really good year, it'd probably be the last place winner for the last 5 years. So utilities tend to be really undesirable, but the market loves utilities, independent utilities. I thought the market would realize that at some point, and I was wrong. And I'll pay the price of being on the wrong side of a short position on Vistra. So interesting. Well, I'm glad I made a lot of money in September. I'll be able to unwind that short position, get out of it, move on, go figure out how to make money elsewhere. All right. So Zim is down 14% in after hours trading. Now, I'm still a fan of Zim. I go on Reddit and I cheer on everybody who stayed there, but I sold around this a little higher than 20. What the heck? What's going on here? Did some bad news hit the stock? I guess the port opening on the East Coast is probably going to make the rates come down. So that would make sense. Like, hey, the rates aren't going to scream up because the whole logistics map, the ocean freight map is all screwed up because we can't deliver to the East Coast. We can't deliver the Gulf. So with the labor strike being solved, probably shipping rates have dropped like almost immediately. Boom. So I can explain the 8% drop because of that. Okay. But the today's drop, I guess they were telegraphing that it was going to get sorted out. Well, I feel bad for the investors. I rode the stock up nicely. I made my money, and I wished all my amigos on Reddit the very best. And I told them, I hope you guys crush it. Hope you make lots of money. Write books about your success. But I started buying here. So I made my money and I walked away. I probably sold about here. I was around 20. I sold about here. So not too far from where it's at now, especially in after hours. So it came back down. But again, I kept a good attitude. It went straight up, and I went on Reddit and I told my amigos out there, hey man, congratulations. Keep making that money. And I'm going to stay away from Reddit because I don't know that they want to hear from me. But thanks for the news, Shadow Guy. I'm sorry to hear that Zim is down. They got downgraded by somebody. Well, who cares, man? Everybody's been a naysayer against Zim. And look at what they did. Boom. When they were really down $6.59 to now, you'd be up 228% in less than a year. So who's downgrading that? And they make good money. These guys make good money. If this stock dropped to $10 a share again and it still had the same business, I would buy again. I'd be like, hey man, I'm into making money. I will buy it. Thank you very much. Nichix, very nice to see you. How are you, sir? Looks like you like NU is God, why does that name escape me? New Holdings, of course, New Holdings. And these guys are doing well, up 91%, but they're down a lot today. What happened? What is going on with New Holdings? These guys are in financial services. And I think they're Brazil, Mexico, Colombia, Cayman Islands. So these economies, I can speak to Mexico's economy is doing quite well. Argentina, I think they've got a few problems. I think we have an Argentinian member. I would love for him to comment because I get my information. I'm up here in the U.S., LA. And, you know, for all I know, I'm not hearing the story right, but I heard Argentina is trying to correct their economy, change their economy. But Mexico's doing well. I don't know about Brazil, but these guys are. So revenue growth. This is why it's exciting. And you know what's interesting about Warren Buffett? You bring that up, Trader Prad. He was backing StoneCo, and I made money on StoneCo, and then he got out of StoneCo. And I was like, what the hell? Why did he get out of StoneCo? And StoneCo still kept working. So, and Nichix, I'm from Uruguay. Argentina economy is not recovering anytime soon, but Mexico and Brazil are okay. Okay, cool. Man, I would love to take a year off and just go through all South America, man. I would start Mexico, go through Central America, Colombia. I don't know if I can go to Venezuela, but I have a friend that went to Venezuela before that environment got bad. And he's talked about waterfalls and natural beauty there. That it's like incredible. Go to Brazil, go to Argentina, Uruguay, Chile. I'd love to do that someday. All right. Enough daydreaming. Let's get back to work here. New holdings, high growth. Beautiful. Beautiful. 62 billion. Whew. It's a lot of cash. They're selling for, I'm going to call it 14 times revenue. PE isn't too bad if they're growing that fast. Forward P is 30. And they're discounted by 4%. So new holdings, I think, is more like a bank, right? Yeah. So I can't value them using free cash flows, but let's take a look at their book value. And book value is going to be on the balance sheet. If book value is growing, that's a very good thing. That's how a bank accumulates its value. So where is book value? So here's book value. And it has been growing. Very good. So the book value is 145. So book value on like Citigroup is, I can't remember off the top of my head, but this is growing. And the valuations on banks, it's quite more complicated. I'd have to look into it and see where this thing values. But I've got Citigroup. I've got PayPal, Robinhood. So I've got a good assortment of stocks in financial services. I've looked at new holdings, and it just never was the right stock for me. Maybe it should have been, but I'm doing okay with Robinhood. Robinhood's been awesome. I think PayPal is going to do really well. But the stocks that I hold within financial services, I have Robinhood. Coinbase has been a rock star. PayPal. I have Allstate Insurance, which has done really well, and they pay a nice dividend. Citigroup's done well, pays a nice dividend. And this is my financial services portfolio. I will ride this. I'm making money. I'm collecting income. I feel good about every single company I own here. I think I've got a great story on Robinhood. I got a great story on Coinbase, PayPal, Allstate, Citigroup. And Allstate, it's funny because I know I was talking with a member about insurance, and insurance in California has gotten really tough to get. I rent properties to people, and our property insurance doubled like from last year to this year. It's like, damn. Okay, that kind of eroded our profit to some extent. And then even our home went up in price. He was telling me similar stories. Well, it feels good when, hey, I made $8,000 on Allstate. Okay, well, they may be punching me, but I'm punching back. And I get a nice dividend out of it. It's not the biggest dividend in the world because the stock price keeps going up, but a 2% dividend, and then I made $8,000. So that pays for my homeowner's insurance and, kind of compensates me for all the insurance that I've been paying. But insurance is tough. And it's going to keep going up. it seems, because property values have gone up, like car prices have gone up. So that's why the insurance companies have really raised their prices. So, but you holdings, man, if you're in that stock, you understand it, you feel good about it, go for it. And congratulations if you've been riding that stock. It looks like you probably did well. You're going to pick up some Zim tonight. Man, you go for it, man. Good luck. Good luck. I hope it works. I hope it goes to $30 a share in 4 months. That'd be awesome to see. I'm still a fan of Zim. All right, so that was a cool afternoon, evening stream. I am going to clear the airwaves. I'll stream tomorrow in the morning, and I'll see if it's a good idea to stream in the evening. And if a lot of fireworks happen in the daytime, there's a big rally. Hey, welcome to the live stream. Let's see what the market's doing today and see if there's any opportunities. Come back and do a stream in the afternoon just to talk about what happened. Hey, man, who made money? Who lost money? What the heck's going on? Let's see if any of the futures are showing. Futures look okay. They look kind of relaxed. I would guess that if you solve the labor strike, it's good news. But I guess it didn't last long, so there wasn't like a lot of pain yet. And this is where we're at. So thanks for breaking the news, man. That was really cool. Everybody have a good night. Enjoy the football game tonight. I'll see you in the AM, and I'll see you, Trader Pratt, in about 30 minutes when you do your live stream. Curious to see what you did. All this adversity in the market, you know, some sectors selling off and stuff. I like to see how other people make money. And that's why I'm tuning in to Trader Pratt. Ben Peoples, hey, man, did you just come in? I missed you. Thanks for joining. Yo, it's Trader Pratt. I don't get it, but thanks for joining, Ben's people. Appreciate it. All right, everybody. Have a good night. May the force be with you. Good luck with your trading tomorrow. They are pretty generous with their knowledge and their wisdom. You just got to read their books and listen to their videos. Learn something new every month. In investing, you'll become a great investor. You'll build wealth. This is a buy stock. You're looking at a discounted stock. It's unappreciated. Don't forget about bonds. Bonds are a smooth, consistent way of earning a good return. And when stocks are really crashing, bonds stand up tall. Bonds stand up tall. You got to ring the cash register and take a gain. Defining when to sell a stock is a lot harder than determining when to buy a stock. And over time, you'll become a great investor